Hello, everyone. It's that time again. It is another episode of Stock Common Sense. Let's go ahead and get started. I know I missed some time, and I know it's coming out on a Monday, um, but there were good reasons for missing. Um, so let me go ahead and recap you on some of the things that we've missed since the last episode, get you up to date as far as like earnings, KPI, what the Fed is doing, and just basically what this market is doing and what we're watching for. In the past few weeks since we've been gone, you can see that the market has been at an uptick, and it is showing me a couple things that do give me um, some reservations, but it gives me hope that a lot of the things that we were seeing in the market is kind of going away. So looking at the S&P 500, we're currently at 4153 Monday, uh, June 6, 2022. The past 2 weeks, we've had big inclines. Um, so starting the week of the 23rd, we opened at 39.10 and we closed that week at 41.68. We did have a down week the week before, showing a lower low. But with this up week, we were able to reduce, or we were able to stop a 7-week downtrend in the market. So you look 1, 2, 3, 4, 5, 6, 7 weeks of just negative news, or not even negative news, but just stark declines within the market. If you look here, I do have a channel showing the downward trend of the market. For me to be fully bullish in a sense of, loading up on options, everything to the sort, I do want to be able to have this trend broken. I want to be able to see an uptrend that shows that we are out of the woods as far as breaking this downward bear market trend and resetting, getting back into the market. So if you look, we have this entire bull market from March 2020, going all the way up until the end of 2021, getting to as high as 48.08, and then starting to downtrend from there. So I do want to see lower lows in the S&P 500, and I also want to see it break that trend of this downward trend that we currently have over here. For the week, S&P 500 was down 1.4, and again, that was explained after having such a bullish week a week ago. So yeah, let's go ahead and go to the Russell 2000. This one gives me a lot of hope as well. If you look, we hit our high back in 2021, back in November, and this also has been a downtrend. So let me go ahead and show you guys how I put on my trend lines. So maybe something that you guys may want to do in the future. So if you look, I like to adjust my chart into a line graph or a line chart. So I'll go from trend, draw it to a line. Actually, let me do this on here. I'll do it on here. So if you look, have my channel, or hang on, change this to a line graph, like I said I was. Line. And then using our channel. Hit that. We'll do it like this. And then I'll go back to my candle line. I like putting on the line graph because it kind of moves out all the noise, with each line being they close on the day or close on the week. You can also do this on the day chart, but I like doing it on a weekly chart. That's where I do a lot of my studying. Go ahead and change my chart back to the candles. And then you can see how it perfectly lines up, right? Again, we're still on the downtrend, but we want to see the trend be broken, right? So this could be a good resistance area. And if you look, like I taught you guys, support and resistance, looks like we have resistance around this area over here. And so what I want to see this do is get past this level right here. If you can look, we are close. We are at that around that channel line, but if we can break this, we can see what kind of goes on from here. So yeah, so then another thing that I liked is that we did have that bullish trend that happened near the end of May. And then the week right after, we were down 0.63, so we were flat. For the week, we are currently up 44%, so we'll see where this goes by the next Stockommon sense reading. But this does give me some hope. What we currently have coming up is that we do have the end of a quarter. So I'm very interested to see what the S&P 500 does then, right? We have a lot of our firms who are not only who not only rotate stocks on a quarterly basis, but I want to be able to see how do they rotate, what stocks will they be rotating out of, and what does the third quarter hold for us. Around near the end of the quarters where I do a lot of my studying and analysis as well to see, you know, what worked, what didn't work, what could we be rotating out of, and seeing how the market rebounds from that. So for me, I am very interested, but one thing I am big on is I still think the market can still get to around 4,800. I read some reports the other day that had the S&P 500 even ending the year at 5,000, with more analysts raising their end of year charts or their end of year projections. So that is pretty interesting to me. So we will follow up and kind of see what that gets to. Now, remember, my mark is 50-50. I haven't moved off of that mark. If it gets there, even after these, you know, large downturns, I'll look like a genius. So we'll see what happens. Let's talk about the news and things that have happened. I'll pull this up. So, like we spoke about a few weeks ago, we've had some issues as far as it comes to supply chain. One company that we spoke about a few weeks ago was Abbott. As of recently, they've opened up their baby formula plant, and this could ease the shortage, right? If you were to pull up Abbott, the Abbott stock, I believe it's ABT. Yep, Abbott Lavatories. You have seen that decline, but you've seen it kind of level off right over here, right? Kind of with the market. So if we were to place this, you can see every time it's gone near this line, it's held its support. Did the same thing this week or a few weeks ago, and you can see it close slightly rising back up. So this is a good sign for us to show that these levels are holding up for Abbott. Let's go ahead and talk about some of the news. The facility was forced to close in February after bacterial contamination was found in the company's formula products. Several babies were sickened and 2 died after consuming the formula that was made at the plant. So with this shutdown or with this reopening, you should see a lot more, you should see prices and baby formulas drop. You should see the demand will still be there, but with supply meeting the demand, we should end up being okay. So we'll end up seeing what happens from there. We also had I believe Biden, did some things within the economy to try to help alleviate the scarcity, as well as him importing formula from Europe, because we talked about that last week. They're also really big in the creating baby formulas and things of that sort. So that is very, very good news. Now, in a little bit more depressing news, again, I don't want to get into politics, but this is important. So there's been a lot of mass shootings within the economy or within the United States, right? With some of our killings being even triple the amounts in certain countries neighboring us, right? This is just a quick Google search as far as the mass shootings. We've had some, I believe we had 3 this weekend. We've had, you know, the big news of the one in, I believe it's in Texas, in southern Texas. And unfortunately, you'll see people with people trying to talk about, gun reforms and, taking guns off the street, you will see a certain sections of individuals flock to get as many guns as they can in case, a lot of these reforms do approach. So unfortunately, I don't think this is an issue that will we will be able to counter, but where there's demand, there's money, unfortunately. Um, One stock in particular, if we were to look at Ruger, you can see that they're currently at 66.09 as of today. If you were to look at their base of their stock, you can see support. You can see support basically around these lines, with this high being as high as 92.49. We've slid down since then, but it's held a good base around the level of 63. So this may be a stock that you look at to see how it rises as well. Another stock is Smith and Western. So if I were to pull this up, and Ruger is RGR, Smith and Western being SWBI. They got to as high as 39.61. They are down for the year, but you can see their base is around this level with resistance around here. So they're currently at $15 and basically 7 cents. Their support line being around 13.59. The resistance being as around 21.50. So they are in a range of motion. Again, they are down year to date, but this is another company that you could look at. Pre-pandemic, they were around. They got to as low as $4.16. So you could see, if you're a big believer in this company, you could see some favorability here. Another company is Olin Corp, which is OLN. They're another one as well. This chart looks way more favorable than before. So we could put resistance around here or support around those levels, and then support right here. You can see we've had a breakout since then. We hit all-time highs. Actually last week at 67.25. We're currently at 65.47. But since it's low back in 2020 where it hit $8.76, all it's done is go up from there. So this could be something that you watch, or something you could be super interested in. And then the last one is Vista Outdoors. That stock symbol is VSTO. You can see right over here, we've had a base right over here, hit a high of 52.69, place level right over there. And then you can look and see how they're doing. Currently at $36.69. Doesn't look like they have a lot of volume. By the way, it's trading right now. Got to as high as $52.69, and then even as 3 years ago, they were at $4.29. Looks like they are currently consolidating, but they did have a upward trend. Let me go ahead and show you guys this as well. So if we were to put this trend right around here, no, put it right here. You can kind of see how they've been following those trend lines. And then the break the week of January 17th, that trend line was broken. So this is one of the things that I spoke about earlier. One of the things I look for, right? I want to see a stock continuing the trend. And if that trend is broken, what will the stock do? And you can see we've been consolidating around these levels, right over here. Oh. we've been consolidating around these levels. So a breakout is expected to occur, but when that will occur, whether to the upside or the downside, it's not for us to decide, it's something for us to watch. But this is something that, I do a lot of analysis on regarding stocks and seeing, following up on stocks that I'm into. Now, just because I've highlighted these stocks don't mean that these are stocks that I'm looking to buy or to purchase. These are just stocks that I want you guys to keep on your radar as these regulators and officials continue to talk about these stocks or to continue to talk about, government reforms and things of that sort. Moving on to Apple, we all know I'm a big proponent of Apple as far as like what they do, what they've been, how much money they make with them being a cash cow. Later on today at noon, so by the time you guys get this, it may be delayed, but they have their WWDC, and this is a big conference for Apple because this is where they do a lot of their software updates. Um, they don't release products as much. We know that typically comes around September. Um, with us seeing the new iPhones and new watches and things of that sort. But this is where they update their iOS systems, right? So if you look, Apple is set to kick off their annual developer conference Monday. Will show off their new features coming to its most popular devices. Um, but Apple could also tease a new product rumored, and that product will be their Apple glasses or the Apple VR system, right? With Meta coming out and trying to be the forefront of the metaverse, they released their Oculus VR headset, so they are first to the pack. But one thing that you know about Apple is that they're not going to be the first to rush out with new products. They'll let you create the product, see where you fail, and then not only take your product but do it 1,000 times better, right? So super interested to see, especially as a shareholder of this company, I'm super interested to see how they do, what they release and what the new changes to their iOS 16 will be. Um, Even reading this article, you can see Apple's expected to show off their iOS 16, which could reportedly include a revamped notification center and lock screen for iPhones, as well as new health features and self-serve features for iMessage. Other rumors point to a new TV iOS features, which could tie into the smart home, and Apple to iOS Watch OS that could boost the battery life in the new MacBook Air. So we'll see what occurs. We'll see what happens. There's something to just take a look. Again, this comes out at noon. So if any big news comes out, we'll follow up with the next Stockommon sent on Sunday. That was a lot. Now moving on to economic key performance indicators. We did have a jam-packed week with the Federal Reserve releasing their minutes saying that they will stick to the plan of at least two half basis point increases to their interest rates. We've already seen a decline in new home sales. We've seen a decline in a slight decline in hiring. But if you look, average hourly earnings, we had a forecast of 0.4%. We actually missed that and we got 0.3%. What this basically shows is the rate that employee hourly earnings are increasing, right? The Federal Reserve is trying to slow this down because the higher the labor wages, the higher the product or the higher the cost of the products, right? And if we're having issues with inflation, then what we want to do is we don't want to end the growth, we want to slow the growth as much as possible to get those costs in line. Unemployment rate came in at 3.6%, forecast at 3.5%. Again, while we did have this just drastic inclines or decline since Corona occurred, we want to see this not only flatten off, but maybe even, or what they want to see, maybe even a slight increase, right? We still have more jobs that are available for individuals. So it's still a employees market. When it's employees market, they're able to dictate the amount that they ask for. They can dictate basically dictate the market, right? Which will then increase costs. Which will then increase costs. If we continue to look at other things that happen within the news, our unemployment rate, For the week, we were down by 200,000 with the forecast of 210. We had our Fed Reserve member speaker. I spoke about that earlier. See if there's anything else. We also have our inflation index, which is our core PCE, which is what the Federal Reserve is currently looking at. I told you guys, I feel like once we hit that spike, I feel like it will start leveling off. We're currently at 3%, forecast was 3%. But you can see with this trend that we're currently sliding back down. So that is good news. Very, very good news. We don't want to see inflation climbing week over week. We did have our prelim GDP numbers, and this is for the first quarter. This was a decrease of at least 1.5% that the economy's gross domestic products decreased. Now, this lets you know how much money our economy made, or not the economy, but like the growth of all goods and services. So for this, we're waiting to see how the second quarter does, and we'll go ahead and see how that continues. We'll go ahead and see how that continues. A lot of economists will say two positive quarter or two negative quarters means that we're in a recession. So we'll see how that comes out at the end of the second quarter. We'll see how that comes out the second quarter to see how bad are these numbers. So yeah, so let's go ahead and continue. Well, I can bring this up as well. You can see the history for the end of the fourth quarter last year. We hit 0.7. Quarter before that, 2.1, 6.6, 6.4, and then 4.1. So this means that we are continuing to grow. We are continuing to expand as an economy. So that is good news. But with that decline, what we want to avoid a recession is having 2 quarters of negative declines. I'll talk about the earnings super quick. I feel like I'm running long. 1 second. Actually, I'll give you a quick recap because I feel like I am running long. Quick recap, we had Crowdstrike, which is a company that I do like. They do protect in not internet services, but they protect in what's the best way to put it? They protect data, they protect I don't know why I keep thinking internet providers. Let me just pull up their bios just so I don't mess this up for everybody. Give me 1 second. So CrowdStrike provides a cloud-delivered solutions for endpoint and cloud workload protection via software as a service. So yeah, so they do offer the cloud performance. They had a great earnings. If you were to look over here on my screen, if I get to pop up, they projected earnings per share of 31 cents. I believe this was, yeah, they brought in 31 cents per share, and the estimate was a negative 19. So you can see that stock has risen since then. Another company that beat earnings was Lululemon. And if you have a girl or a wife, you do know how much they run the streets as far as women athletic wear. They also had earnings. The estimate was $1.43 per share, and the actual was actually $1.48. See that rebound there. Another company that killed it was was Salesforce. If you were to look, they had an estimate of 34 cents earnings per share, but the actual was actually 98 cents per share. So that was an amazing upward tick for this company. So just something to watch. This is a company that is really good, especially for the HR portion. Um, and a lot of small businesses use them for their CRMs as far as gaining clients and things of that sort. Stock of the week, talk about that real quick. For me is Neo. Um, I have Fibonacci's and we'll talk about that because that's the tip of the week. But Neo, um, just to talk about it real quick, 'cause I know a lot of people were big on it during the pandemic. And if you look at this chart, you can see why. Um, but fundamentals always, always, always went up. But NEO is a China-based holding company that's principally engaged in research, development, and manufacturing of premium EV vehicles. The company is mainly engaged in design, development, and manufacture of sales of high-end smart electric vehicles. The company basically, their products include the ES8, ES6, the EC6, and the ET7, which is all of their car models. The electric vehicles apply a NAD, which is the Neo Anonymous Driving Technology, including supercomputing platform Neo Atom and super sensing system Neo Aquila. Uh, the company is also engaged in provision of charging piles, vehicle internet connection services, and lifetime warranties. The company mainly conducts its business in the domestic market. So they typically invest, or they're basically based in China, so the cars stay in China, right? One thing about this company is that while they are based in China, you can invest this company within the US stock exchange. This is this is big. I know this is kind of new for a lot of people, so I want to go ahead and explain it. This is what we call American Depository Shares, and this is an equity share of a non-U.S. company that is held by a U.S. depository bank and is available for purchase by U.S. investors. So basically, they have shares with they are a company that's based outside of the U.S., but they do business or they're allowed to be traded here because their shares are held within the bank, held within a U.S. bank. ADSs allow foreign companies to access a wider investor base and the world's most sophisticated financial marketplace. The key about ADRs, and this is one thing that I learned when I worked at TD Ameritrade, is that they are subjected to an additional tax because they are foreign based. The tax withholding is in addition to the dividend tax that you may receive that's already levied by the U.S. Authorities. The dividend tax can be avoided by ADR investors by filling out a form 1116 for foreign tax credit. So these companies, while you do invest in them and you can make gains in them, they are taxed a bit differently, or they have additional taxes because they are foreign companies. So something to watch out for. Year to date, they are down 43%. This is not a company that I am invested in, only because they aren't the top tier. They aren't a top tier company as far as the EV space right now. That's currently Tesla, and then also they haven't made any money in the years that they've been operating, right? And I'll explain that in a second. Year to date, they are down 43% from their highs, starting in April or starting in January when they opened up the year at 33.52. They're currently at 19.35. For 1 year, they're down 55%, and for within 2 years, they are up 202%, and for 5 years, they're up or I believe 3 years, I have a typo, they're currently up 68%. They're currently down 73% from its high of 66.69. This is a killer chart. Imagine buying at a high at 66.93, putting in $1,000 and waking up and only having, what is that, $370 to your name. That'd be something that'd be mind blowing to me. And that's if you buy at their all-time high. Again, they are a leading manufacturer of premium smart EV vehicles in China. One good news about NEO is that they are back to pre-pandemic factory labor workers and manufacturing levels. That is something that is pretty major and something that is pretty big, especially if you are a believer in that company. If we were to pull up their fundamentals and their if we were to pull up the fundamentals, you can see kind of why I always have reservations about this company. So if we were to look, if you were to go to their income statement, which I love to use, this is on a annual basis. You can see their total revenue, while it has increased year over year, with it even doubling from 2020 to 2022, so has their operating expenses. And the operating, whenever your operating expenses are higher than your total revenue, then you're working in the red. And you can see every year since they've started, they have operated within the red. So they have not made a positive OI income. Um, but the thing that does give me some pause, if you look at their cash flow, their cash from operations within the last 2 years have been positive. So it is a pretty good sign, right? And all of these are in Chinese yen. All these are in Chinese yen. Um, so that is pretty good news. Um, they did have record revenue in the fourth quarter. So I will go back to their income statement. And if we go on a quarterly basis, they did have a record revenue of 9.9 billion yen. So that is good news. Um, they also sold their first sedan of the ET7 back in March 22, and they will deliver its second ET7 by the third quarter of 22. So it is something to watch out for um, if you're a investor within this company. If we were to talk about their price targets, we can go to the analyst reports. Um, Their base case is 41.48. And again, they're currently trading at 19.32. Their bear case, which is the worst case, we have a lot of analysts thinking that they're going to fall in at $26. And we do have a couple of strong buys getting to as high as $87. Getting as high as $87. Um, So that is Neo. That is something I want you guys to look for if you guys are interested in this company. I wanted to give something that was popular, but I wanted to give um, some fundamentals behind why I may not be an investor in this stock. Um, but we all invest for different reasons. We all invest for different reasons. So one thing I wanted to show you guys, if you saw earlier on my chart, I do have these red lines. These are what we call Fibonacci retracements. I wanted to talk about this for a second. A lot of times what I like to do, I like to go 5 years out. I like to go 5 years out. And what I want to do is I want to go from the high to the low. I'm going to go from the high to the low. And what this does, it will give you a range of it'll first it'll give you a range of prices at different price levels. So if you were to look on the left hand side, it shows the percentage. Right hand side, it shows the prices. So if you look, our high at 100% was 66.99. At a 50% level, the stock is at 34.09. At a 0%, which is the low, the stock is at $1.19. So what this basically says is if you were to go on a 5-year basis, this stock has not only gone past its halfway mark, past the 38.2 mark, but it even touched the 23.6 mark, 28.6 mark. Now, for me, I like buying stocks that I'm really big in at their 50% level, at the 50% level, right? The reason I like doing that is because this is letting me know, okay, the stock that I'm really into is at half off. It's currently half off. So two levels I like are 50%. If I like a stock, I'm for sure buying at the 50% mark. And if it gets to 30 and anything below 38, to me is a good buy. So from 50 on is a good buy to me. I have some people who won't buy a stock unless it's at the 38 or the 23. For me, I like getting in at 50 and 38. Those are the spots I personally love. Um, so if we were to look, this is Neo. If you like the stock, It touched the 23.6 level, and from there, it found a base and it's been rising ever since, right? With that 23.6 level being at $16.72, and they are currently up. If we were to do a stock that I'm in, let's go ahead and let's do Tesla. You can see I already have it set up on my chart. I have the levels laid out, and if you look, it hit the 50% mark and then pinged up, right? I always redo my chart every time there's a new all-time high, just so I have the most recent levels up, right? So if you look, it hit the 50% mark and it's been up ever since. Let's go ahead and let's do Microsoft as well. And I'll show you guys how I do this. So if you look, go 5 years out. Let me expand this. So its high was $394. I'll do that. Go down to 68.09 or close to it. And you can look and you can see its levels. Now, the one bad thing about it is that you'll have some stocks that are just so good that they never get to this level, right? They will never get to that 50% level. For certain stocks, I have different rules. So like for Apple, for me, anytime Apple gets below 15%, it's an automatic buy, no matter what. But that's just a level for me, right? So if you look, it got to as low as what? From its all-time high, it got to as, was that 22%? Got 22%. I was buying all during these times, right? So I know it may not ever hit 50%, but I'm buying at levels I think are super reasonable. If you look, I even have it marked off in green at a level that I liked, bought some more around this time, and I'm up ever since. I'm up ever since. So this is something to watch, and it's something that I do use pretty often. I do use this pretty often. So we can do another one. So if you look, I have Google already marked off, but let me go ahead and update it to its all-time high, 342. And then does it show its all-time high here? No, let me adjust this. So for 5 years, the low was 898.5. And now all my levels are marked off, right? All marked off. So this is something that I like to use and something that I do use pretty often. Another thing that I like to do is I like to use it for growth projections, right? So if I update this, what I want to click, or if I want to update, I want to make this 25%. And I'll show you exactly what this means. So what this basically means is at 100%, or at its all-time high, it sits at 3042, right? Google's currently at 2357. At 5% growth for the next 5 years, which is a base case for me that I use for a lot of my stocks, this stock should get to 3577 if it's a good company, right? If it continues to trend at least 5% each year, it should get to that level. So that's how I figure out what my price targets are in case I want to hold or buy up until that mark. So that's just another way that I use Fibonacci's, is to create my price targets to find the levels that I want to buy in and adjust from there. So I know I went kind of long on this Common Sense episode, so I do apologize. I just wanted to give you guys a quick run through of the market, and I'll make sure I keep bringing these to y'all every Monday, or I'm sorry, every Sunday, and worst case every Monday, just so everybody has them. So appreciate you guys listening in, learning with me, and I'll see you guys when I see y'all. Have a good day.